Namaste everyone. I'm solving the question of ratio analysis. So 5 marks question is calculation of current ratio and liquid ratio. Okay. See the question here. This is 2013 repeater question paper. From the following information of X company limited, calculate current ratio and liquid ratio. So particulars rupees, sundry creditors 60,000, bills payable 20,000, debentures 1 lakh, bank overdraft 40,000, outstanding expenses 20,000, and cash in hand 20,000, cash at bank 40,000, sundry debtors 80,000, bills receivable 20,000, stock 60,000, short term investment 40,000, and prepaid expenses 10,000. So by using these informations, we calculate current ratio and liquid ratio. See here the solution. So first question is calculation of current ratio. Calculation of current ratio. Then what is the formula of current ratio? So the formula of current ratio is current ratio equal to current assets divided by current liabilities. Okay, so this is the formula, and now we find out these items value. Okay, first here we calculate calculation of current assets. Then what are the items of current assets? So see in the question. So cash in hand, cash at bank, sundry debtors, bills receivable, stock, short term investment, and prepaid expenses. Okay, these all are the items of current assets. Okay, I will write here cash in hand plus cash at bank plus sundry debtors plus bills receivable plus stock plus short-term investment plus prepaid expenses. Okay, then see here the amounts 20,000 plus 40,000 plus 80,000 plus bills receivable 20,000 plus stock 60,000 plus short-term investments 40,000 plus prepaid expenses 10,000. Okay, here we get the total 2,70,000. Okay, this is the total of current assets. Okay, current assets na total estappa ಅಂದ್ರೆ 2,70,000. So ಕೊಟ್ಟಿರುವಂತಹ current assets informations ಅನ್ನು add ಮಾಡಿ we get 2,70,000 answer ಬರ್ತದೆ. Then next we calculate calculation of current liabilities. Okay, calculation of current liabilities. Then what are the items of current liabilities? See in the question paper: sundry creditors, bills payable, bank overdraft, and outstanding expenses. Okay, debenture is a long term liability, it is not a current liability. Okay, and here we take the items, that is sundry creditors plus bills payable plus bank overdraft and final item is outstanding expenses. Okay, by adding these values we get the value of current liabilities. Then sundry creditors amount is 60,000 plus bills payable amount is 20,000 plus debentures bank overdraft amount is 40,000 plus outstanding expense amount is 20,000. Okay, by adding these items we get 1,40,000. Okay, 1,40,000 is a current liability amount. Okay, you can see here, by using these values, that is current assets value and current liability value, we calculate the current ratio. Okay, what is the amount of current assets? That is 2,70,000, and current liabilities amount is 1,40,000. Okay, here we get the ratio, that is 1.93 ratio 1. Okay, so the standard ratio of current ratio is 2 ratio 1. Okay, but the actual ratio of this X company is 1.93 ratio 1. Then the interpretation is, so the current ratio is less than the standard ratio, hence the liquidity position of the company is not sufficient. So this is the interpretation of this calculation. Then next we calculate, this is what about calculation of current ratio. Then the second question, see in the question paper, liquid ratio. Next we calculate liquid ratio. Okay, and what is the formula of liquid ratio? So I am writing here second one, liquid ratio. Okay, so the formula of liquid ratio is liquid ratio equal to liquid assets divided by liquid liabilities divided by liquid liabilities. Okay, then here we will calculate liquid assets. So liquid assets equal to, so the formula is current assets minus stock plus prepaid expenses. Okay, from the value of current assets, if you less stock and prepaid expenses, you get the value of liquid assets. So the current assets value is 2,70,000. So we put this amount here as 2,70,000 minus. So what is the amount of stock? So see in the question paper, the amount of stock is 60,000. So write here as 60,000 plus the value of prepaid expense is 10,000. Okay, so if we deduct these amount from 2,70,000, we get 2 lakh as liquid assets. So I am writing here as 2 lakh the amount of liquid assets. Then next we will calculate the value of liquid liabilities. Okay, so see here, calculation of liquid liabilities. Liquid liabilities equal to, so the formula is current liabilities minus bank overdraft and cash credit. Okay, if you less these two items from the current liability, then we get the amount of liquid liabilities. So what is the amount of current liabilities? That is 1,40,000. Then what is the amount of bank overdraft? 40,000. Okay. In this problem they have not given the information about cash credit. Okay, so put the nil. Then 1,40,000 minus 40,000, we get the amount, that is 1 lakh as current liabilities. Okay, so here 1 lakh as liquid liabilities, and here we get the ratio, that is 2:1. We get the liquid ratio as 2:1. And what is the standard ratio of liquid ratio? standard ratio of liquid ratio is 1:1. Okay, so if actual ratio is more than the standard ratio, then the liquid position of the company is sufficient. So this is the interpretation of liquid ratio. Okay, this is 2013 question paper of repeaters. So if you have any doubts, so put in the comment box. Thank you.